Hello everybody, welcome back to the daily review of 15th of October. So, again, today was actually a very similar profile to what we actually saw yesterday on the 14th of October. Now, what I mean by the similar profile was what happened when midnight opened up straight away, right? So, I basically told you what will happen today, yesterday, okay? I said that the very important reversal will happen within this day, moving towards that minute opening price. Okay, don't believe me? Just go back to that previous day's daily review right at the end of that video. Okay, so let's talk over this price action. Midnight opening candle, very little amount of manipulation beneath that midnight opening price. Tuesday 14th, very little manipulation above that midnight opening price. Okay. Let's focus on just today's. What do? We run higher, leaving all of these hourly candles lows intact. Okay? See all of these hourly candles? Every single hourly candle is a time-based range. So all of these are time-based ranges. Okay? But that's not what we're going to be focusing on. Again, our main draw liquidity that we're going to be focusing on is this minute opening price. Okay, because of the failure to manipulate underneath. Now, remember the same concept, right? Remember, term price are completely fractal. If you don't manipulate above or below a very specific opening time, then that current move that you're being inside of is going to be a Judas swing. Okay? Now, there's a reason why I tell you to keep this in mind. 3 major reversals appeared today. During 9 o'clock, 10 o'clock, and 1 p.m. Okay? So let's jump down into low time frames here. Actually, in fact, let's draw out our Tapda projections because, you know, this is what we have to do every day now. Okay? Let's draw out our Tapda projections. There we have it. There's our first one. Look, 9 o'clock. And then let's draw out the 9 o'clock candle over here. Okay. So now on both charts, let's drop down into that 9 o'clock hour. Okay. Now you can see I've got a very specific time range drawn out on my charts. Now, the reason why I have this out on my charts is because this is a specific time range I had drawn out inside of my live trading, right? So as I was live trading inside of my Discord here, I had this very specific time range written out. And as 9:30 was opening up, I said, if we see a move up here, I'm looking for shorts. But look what happened. 9:30 opened up, and we ran lower, leaving this high intact. This told me with extreme confidence that we will be seeing a reversal unfold during this very specific time window, which is 9:43 to 9:59. We're going to see a reversal take place to the upside. Okay? Now let me go jump back to the 1 hour here. Okay? On both time frames, in fact. Because I want you guys to get used to something here. There's a 9 o'clock hour. 9 o'clock is here. Okay? What do we see happen? We see 9:30 on NASDAQ trade below that 1.5 level and very close to that 1 level. Okay, but remember, what is our reversal range, right? Our reversal range is 1.5 to 2.5. That's our reversal range, okay? Same on ES here. 1.5 to 2.5. Now, in this case, it's a very large range. Now, I managed to call this I managed to call this 9 o'clock low to basically the exact tick, okay? During my live trading. How did I manage to do this? Well, on my chart, I had a very specific time range liquidity pool drawn out. Okay, it was this low over here. This low, I still get turtle souped. Once I saw this, I knew a reversal was going to be imminent straight away. What do I do? When we're reaching into a very specific time-based liquidity pool, I always drop down to my 15-second time frame because I know there's a high chance of certainty that a reversal will unfold from this time-based liquidity pool if the time is right. We are within this specific time window. Now, the reason I was so confident that we were going to come back up above this high was because of two factors. Those factors are the same exact thing as I saw as the minute opening price, okay? What I mean by this is, let's take our 9 o'clock open. What do you notice? Zero wick above that 9 o'clock open, right? Now let's take our 9:30. Again, close to zero wick above that 9:30 open. What is this telling me? This is telling me that the move that I'm currently in cannot be a real distribution. Okay? This has to be manipulation. So what am I waiting for? I'm waiting for a very specific price level to get met during a specific time window, my CSD, and I know that first CSD will be my true reversal. Because I know that this right here is our manipulation. Okay? Let's drop down to the 15-second chart to talk of the two entries I offered. Okay? The two entries I offered was this breaker right here during this 9.50 candle, okay? So this right here was the very first entry I offered. Now, the only reason I didn't take this very first entry right here is because we failed to have a extremely internal SMT. Because when I'm trading my SMRs, I require at least a 15-second time frame SMT. If I fail to see that SMT happening within the SMR, then I never take the SMR trades. Okay? And I always wait for my second CSD on a higher time frame to take place, which was this over here, and this is the trade I actually took. If an SMT was present, I would have took this ASAP. And I know a few of my DLS Discord members actually took that long here from that SMR because everything was aligning from this SMR. It's just part of my protocol that I cannot take a trade without it being without there being 15-second internal SMT. So it's a shame, but this also protects me from taking more losers, right? Because there's still a chance that we come down here one more time. So I took my trade from up here at this unicorn model that formed now. Now, what do I target? First partials came off at that high, remember? We knew that this was a minimum target to get met. Okay? Now, next target I was actually looking for to get met, and I took basically my whole position off there, but next target I was looking for to get met was 235. Again, I'm not going to explain that, but that was my next target. That failed to get met. Now, the reason why it failed to get met was, again, we need to zoom out and realize the bigger picture. This market maker model that I caught, it was a fractal. Okay, this was a smaller fractal. But let's jump back. Actually, let's do a 15-minute chart. You'll be able to see it with a bit of a clearer picture here. Inside this 15-minute chart, this power of 3 still failed to get met, right? We were still inside of this manipulation phase because we failed to manipulate below here. So what do we know we need to do? Wait for an SMR. How could you have known an SMR was going to take place? Let's jump back up. SMR formed during our 10 a.m. Okay? Let's take 10 a.m. there. And let's take 10 a.m. on ES as well. Oh, where's my 10 a.m.? Sorry. 10 a.m. from there and there. Okay, so now, again, I want you to remember our reversal window. Okay? 1.5 to 2.5. This is our reversal range. Now, remember, I always require 2 SMTs. First SMT being with 2.5, okay? NQ fails to reach into that 2.5 range. Where's the second SMT? Let's zoom out even further. Second SMT is with this breaker over here, okay? ES reaches into that breaker. NQ fails to reach into that breaker. There's our second SMT, okay? So now we know we're going to be reversing during this 10 o'clock hour. Let's drop down into the low time frames here. Okay. So, as we can see, the Tapda projections holding to the tick as usual. Okay? Now, what could have confirmed this SMR? Okay? Again, it's the same things over and over and over again. It's the same profiles happening day in, day out. See this turtle soup with SMT? See that? That right there is your entry confirmation. Maybe you didn't have to take it from there. You could have took it from this first one, which very well you could have taken. But guess what? It wouldn't have mattered. Because on either turtle soups that you could have taken, you know price isn't coming above that type of projection. So give it a little bit of room, like that. And now you're in your short position. Okay? You're giving it room to turtle soup, turtle soup, turtle soup. See how we're trading with not candles, we're not trading with fair value gaps, PD arrays, we're trading with very specific price ranges, and we're waiting for very specific things to happen at very specific price ranges and price levels, okay? Now what do we focus? Okay, first partials come off beneath this 930 low. Now, what do we hold to? Minute opening price. Okay? This seems ridiculous, and it seems completely, you know, it doesn't seem real in the position that you're at, maybe. But when you practice, and I'm begging you to practice, because the risk to reward you can get from practicing, and you know what? Even if you find that somehow for you this isn't working, so what? The risk to reward of you trying this, you're not buying anything, you're literally just spending a little bit of time, which you do anyways on the charts, back testing these very specific price levels. If you do that, you'll become a master in this art, and it'll pay off for years, okay? Spend a few hours and it'll pay off for years. So please backtest these type of projections, because you will see things happening every single day, okay? And you'll see specific PD arrays lining up with very specific levels, okay? So those are the main moves that you could have caught here. And again, you could have caught this short down here. Sorry, this long at this 1 p.m. But honestly, I would be uninterested after this this New York minute opening price getting taken out. So those are your main 2 trades that you could have taken. Ideally, honestly, the short was the best trade you could have taken. Because this is against your high time frame bias, the longer that I took, but it was just so clean, everything was lining up so perfectly that I just thought, let's take it, because, yeah, why not? Free money, right? So, those are the 2 main trades. Again, you could have taken this, but it wouldn't have been ideal. It's quite risky, to be honest, because after you see that first terminus getting taken out, then anything after that is pretty risky, to say the least. So it's better just to stay out those positions that have the chance of being extremely high resistance, rather than staying inside of them. Okay, so that was the daily review of October 15th. I hope everybody enjoyed and learned something new. I'll see you in the next one. Goodbye.